Good evening, guys. This is Bathrobe Business. I'm George Yoganov. I got my decaf coffee and I got the news. So let's jump into it. So I've got about 4 or 5 stories I'm going to share with you guys today in the world of business. These are the ones I feel have greater market implications, and they're not really interconnected too much, but I still think they're important. So first story I'm going to just jump into, Apple. So Apple had a terrible quarter. It's the worst since August. It's driven entirely by China. And try as I may not to talk about China, I end up talking about China. I think a lot of people might think that I'm a huge, I don't know, China sympathizer. I don't know what the term is nowadays for someone that aligns with another country, traitor, whatever. I'm not. I'm not that huge of a fan of China. It's just I feel like you have to give credit where credit is due. So just to give you some context, 4 years ago, it would be, I think it was maybe 4 or 5 years ago. It was pre-Biden administration. It was in the Trump administration when a lot of chips were blocked from being sent into China, and that meant that they could not build their phones. And so Apple just dominated the market. Apple, Android. I know I misspeak when I say Android because I don't know about the relationship between Korea and China, but there's no question that China dominated the market. Fast forward 4 or 5 years, China started developing their own chips. And not only are they matching Apple, within less than half a decade, they are exceeding it. So Vivo and Huawei, I'm sorry. Huawei, obviously a big name. We know about them even here, but Vivo as well. Two phone manufacturers I've talked about before on this channel just keep destroying Apple because they've started producing their own chips. And Apple just simply can't compete. They're not just like down. They're way behind in the third spot. iPhone maker's stock price is down nearly 12% from its most recent peak in December, and it's worst performing of the 7 technology companies in 2025 so far. Apple shipped 15% of the 284 million phones sold in China last year, according to the report, but that was down 17% on an annual basis. They're down almost 20%. That's massive. That's massive. Meanwhile, Vivo and Huawei have incredibly strong growth. There's another component here that Apple's having an issue with, but I think that's unquestionable to show you the manufacturing power of China. I think a lot of times, and I say this a lot, people think that China is just about cheap labor. It's not. They are experts in manufacturing. They have the supply chains worked out. They have the infrastructure worked out. And within a couple of years, they went from not being able to produce those 3 nanometer chips to being easily produced and exceeding that of companies that have been doing this for decades. Now, currently, why the other reason I bring this up is we are currently blocking NVIDIA from selling into China. Well, if they were able to develop this, I don't think it's outlandish to say that they're going to develop these graphics cards probably just as quickly, if not quicker. Because in all honesty, I am a layman when it comes to this, but silicon chips in my mind are much more difficult to manufacture than graphics processors are. NVIDIA doesn't actually even manufacture their own, right? They outsource everything to Taiwan. Silicon chips are much more difficult to produce because the equipment is needed. There's argon gas that needs to be heated at certain levels to do it. There's lasers that have to be calibrated at certain levels to do it, to create the wafers. It is a multi-country process, oftentimes, to get silicon chips made. But graphics cards do not have that hang-up. So I do wonder if this is a forecast of things to come with graphics cards as well, and with AI. I think we believe that if we just cut off graphics chips from being shipped to China, we can cut off their AI capabilities. But quite the opposite, we may actually, in fact, spur their AI capabilities, because now they have no choice but to develop their own. And seeing the manufacturing power of China, as we have time and time again, I don't see any other way of it going other than them developing chips to compete. Graphics cards to compete directly with companies like NVIDIA, and probably exceeding them within a couple of years. Let's not forget, uh, electric cars, there are 100% tariffs on the board right now in the United States against electric cars produced in China because they've done it so well in, again, just a handful of years. I don't think this is to be underestimated. Now, digressing a little bit, coming back to it, the other interesting thing is Apple is also having internal problems here in the United States because it doesn't seem like Apple Intel has spurred any new growth in the company. So, China aside, it doesn't seem like their last offer of products has actually yielded anything. Similarly, I think I talked about on this channel, their little Oculus competitor, which I can't even remember the name of, was discontinued, I think, 2 quarters ago. They're not producing them anymore, and it silently just faded into the night. Now, that's not too surprising, seeing as how I think time and again we see things like 3D and VR just not having the mass adoption that these companies think they will. But there's always that idea that Apple is somehow able to figure out the formula better than somebody else. And even with that, they were not able to. Personally, I think Apple may be headed in the right direction with AI in regards to their earbuds, better Siri integration, noise cancellation, stuff like health of auditory nerves and cochlear health that causes hearing loss is actually kind of a big deal globally. It's kind of unknown to a lot of people just how much hearing loss and hearing damage leads to cognitive issues. I have family myself that suffer from hearing loss, and it definitely impairs their functionality. Well, the earbuds have natural noise canceling and natural volume adjustment. So it's not a small thing. I think it's got the potential to grow into what the Apple Watch has, but I think it still has room for development. Now, it could also be that this is a signal of what AI is, right? There is unquestionably more hype to AI than substance. Everybody loves to talk about how, oh my God, AI is amazing, AI is amazing. And then when you probe the subject a little bit deeper, it doesn't really seem to do much. And even businesses that claim that they adopt it are really just using it in place of call centers, which honestly doesn't even necessarily equate to cost savings. If you could have somebody in India, Pakistan, etc., in a call center, or it's an AI agent, does it actually matter all that much? Is it actually raising productivity? So that's it with Apple, but I'm going to move straight into another story on China. Now, this is something I hinted at yesterday, and I'm not going to spend too much on it because I think I focused too much on China already. But China's fourth quarter GDP has grown at 5.4%. That's the quarterly growth, but it did push their yearly GDP to 5% growth, and this was on target with them. I just mentioned this because, again, when China seems to set a goal, they end up fulfilling it. Next story I'm going to talk about is of the Biden administration's loan forgiveness program. Now, again, I'm not going to focus too much on this because I don't like this channel to be about politics. I try to keep it centered around business, but I feel like this is a story that I've talked about repeatedly over the last few, I guess it's been a couple of years. I think I've talked about this for a number of years now. This channel is 2 years old, but it's always kind of going under the radar. The last round of loan forgiveness has gone through from the Biden administration. Now, most remember that in 2022, Joe Biden tried to get a mass student loan forgiveness passed. That didn't end up happening. The Supreme Court dropped him. However, they have been going through a series of lawsuits, legal loopholes, restructurings, you name it, using every trick in the book to try to get loan forgiveness on to as many people as possible. Now, I'm not passing judgment. I don't know how I feel about this myself. Again, I don't want to get into the politics of it. I don't know if it's right or wrong. I'm just simply saying that they've actually managed to do a very good job with what they intended. Given the fact that their hands are tied, I feel like this could be one of the things that the Biden administration is remembered for the most, because they did eliminate $189 billion worth of debt out of private hands. Now, a lot of people are going to say, well, this isn't eliminating private debt. This is redistributing tax dollars into it. And that's a fair argument. However, it does, I feel like, change the trajectory of many people that were struggling with these student loans and with this cost. And this will, in fact, probably have a positive effect on the economy, at least in a traditional Keynesian sense, I would say. What the other interesting thing is in the most recent forgiveness is they focus specifically on DeVry University and made and the claim was that DeVry made widespread substantial misrepresentations on its job placement rates. So essentially, they opened up the lawsuit against DeVry, I'm sorry, saying that they misled applicants into applying, that their jobs were more highly paid and more guaranteed than they actually were. I think that's something to consider, that a lot of these student loan programs are very predatory in a much more aggressive way than the housing market ever was. During the '08 crash, there was a lot of talk of predatory lending. I think that it pales in comparison to what happens in student loan programs, where they promise jobs. There's advertisements for different private schools on television, YouTube, Facebook, everywhere on a daily basis, convincing you that this is your mechanism to make more money. Your way of escaping the grind is to get an education and get a better paying job. But oftentimes it's in professions that are probably oversaturated, or the education you're getting doesn't actually qualify you for the job that you're seeking. So I think this is a very powerful claim. Of all the things that I think, again, I'm not a critic of Joe Biden on this channel. I'm not a lover of Joe Biden. I'm just simply stating, of all the things that Joe Biden has done, I think this could be one of those linchpins that he is remembered for the most, of starting the debate on student loans better than anyone else. I think this is kind of the John the Baptist kind of move. We really need the Jesus Christ to bring this home. But I think this is the first step in the right direction. I don't think Joe Biden has the energy to had the energy to get it to where it needed to, but the next person already has their foot in the door to do that. Next story I'm going to talk about is U.S. retail. So this is something I've talked about on the channel repeatedly. Retail sales jumped 0.4% in December. Core retail sales jumped 0.7% in November data after it's been revised. So very, very strong retail numbers once again. We're seeing incredible growth in this sector. Even Target, which has had a very bad last 2 quarters, they actually saw very strong sales in the month of November and December as well. I don't have the story up here, but they did. Where they lacked was the profitability. They were struggling with profit, as they did in the previous quarter, but their overall sales were actually up. I talked about on this channel a couple months ago, I think it was back in late or early November, about how Target had overinvested in too high ticket prices. So selling products that were too expensive, not focusing on the core bread and butter issues since inflation was so high. But even so, they still managed to pull out a very strong quarter overall. Next story I'm going to talk about is EVs. EV sales reached a record 20% of U.S. vehicle sales in 2024. This is a major milestone. So 20% is 1 in 5 cars. So 1 in 5 cars sold last year was an EV. Now, I exaggerate a little bit. It wasn't truly just EV. It was either EV or hybrid or plug-in hybrid. However, that is still a major advancement. Now, it's very interesting what's going to happen with the EV market in the next 10 years. I think we're still going to see major drops in pricing, since we have so many EVs in the secondary markets that just simply did not exist. So far, they are faring very well. I was very skeptical with EVs in secondary markets because I assumed that their batteries would be losing power very quickly. So far, that has not come to fruition. In fact, their batteries lose very little efficiency year on year. And with some of these cars getting frequent updates through the cloud systems, you're getting new features coming into your car without actually having to upgrade. Now, that may change. It may be a scenario that a lot of these EV companies will make you pay for those updates and buy those extra features. That's very fair. And that's actually good for them because that's a recurring revenue model where they'll be able to make money without having to mass manufacture. But I think the next 10 years are going to be very critical in what happens with EVs in the secondary market. It's my prediction that EV sales are going to obviously grow, but overall prices are going to decline. because I think the secondary markets are just going to beat up new sales, seeing as how especially a lot of these companies, Tesla, I should say, I don't think a lot of these companies, that Tesla has been releasing the same model with very little revamp for numbers of years now. I think the Model, I don't know, the Model S and the Model X are like, what, 10 years? I don't even know all their models, but I don't see very much variation. The Cybertruck is the greatest innovation I feel like that's come out of Tesla in a while. And I wouldn't call it an innovation, but it's something new that they've actually produced. Last story I'm going to talk about is just mortgage rates. So mortgage rates rise above 7% for the first time since May. This is kind of a double-edged sword. On the one hand, it's a good thing, in my opinion, simply because it can actually help reduce the cost of cost of living, cost of homes. It can actually reduce home prices. However, it is kind of disheartening seeing as how we dropped a full percentage in the last 3 months on base rate interest rates from the Fed, and our mortgage rates are actually up. And that's kind of what I always underscore on this channel, is that those interest rate cuts are not for you, they're for Wall Street. And so it is a little disappointing to me that Wall Street has gotten a break, but Main Street hasn't. However, on the bright side, hopefully this does help affordability and housing, because it will actually force people to cut prices when they're selling their home, which, by the way, I will be a victim of, because I plan to sell my home this year and upgrade into something different. That 7% and a lower sale price are not good for me, but I do think it's better for the overall market. That's pretty much it. Those are the stories of the day, and actually probably the stories of the week. I will not be here tomorrow. I am going to Sebastian Maniscalco's stand-up comedy show. I think it's at the Eccles Theater. I actually need to check my ticket, but I will be at Sebastian Maniscalco's comedy show tomorrow night. If you're there, if you see me, say hi. I'd love to meet you in person. So I hope you guys have a fantastic Friday and a fantastic weekend, and I'll see you guys back here on Monday.